Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Okay, welcome guys. Welcome to Stocks and Average Trading. Thank you guys for joining. My name is Ron. My partner is Dave. Guys, this is our weekly webinar that we're going to do, and it's entitled The Journey of a Trader. And all of us have some sort of journey in trading. So I'm going to go through the important phases and stages, and we'll talk about each one of those phase or stage, and I guarantee you one of us on this call is in one of these stages or phases. We've gone through it, or we've struggled with one of these phases. But it's really important that we understand each of these, and I really want you guys to think about your trading, your journey, okay? And where you're at and where you are now before we even do this webinar. Like, just think about it and where you want to be, and we'll talk about after we get through this webinar, and then maybe it might make you a better understanding of your journey. Okay guys, so before we get into it, I'll wait like 5 more minutes for everybody to get in, and then we'll get it started. And yes, thank you, I will hit the record when we get started. I just want to kind of review the markets today. This is NASDAQ. Okay, it took this big candle today. It was obviously FOMC today, took a massive push to the downside. There was a 0.25% decrease, which was expected with the U.S. federal funds rate. But Powell also kept talking and talking and talking. I'm like, when can they get this guy off and just shut up and get him out of here so maybe the market can recover? But he kept talking about guidance about going into the new year. And all of it, and the market just kept dropping and dropping and dropping. It wasn't just NASDAQ, it was everything. Like, whatever security you look at, if you look at GBP USD, there was a big drop. If you look at US 30, big drop. If you look at oil pushed down. If you look at Bitcoin, big drop. It was trading at 106,000. Dropped to, right now it's consolidating at 100,000. Why? Because what was the big driver? What was our webinar we did last week? It was DXY, the US dollar. Look at this massive push on DXY, breaking through all of this daily resistance. Like right here, it kind of above 107, over here 107. You can see how it was resistance even here, all the way from 2022. Okay, so when we look back now, this resistance that the US dollar broke through was from 2022, right here, November 2022. We revisited it October 2023, and then we finally, again, pushed through it. So that's a big move on the US dollar. And if we look at like where I am, USD CAD, the Canadian dollar is just shitting the bed right now. And it's the exchange on the US dollar, Canadian dollar, where I am over here is, look at it. This thing is ridiculous here. Look at how much value the Canadian loonie, the dollar, has lost. Look at this compared to the US dollar. It's approaching $1.46. Like, when was the last time we were up here? Look at this, guys, 2020. This was the pandemic, right when the pandemic started, March of 2020. And then May, we were in lockdown. It kind of peaked up here at 146.50. So you can see it's rebounded all the way since pandemic levels. Okay, what else we got going on? So we know what happened today. Okay, so they dropped federal funds rate 0.25% to 4.5%. Then Powell came out and then he started speaking, and the market kept dropping and dropping and dropping. We'll see how the markets react absorb all of this tomorrow, and also then we have Friday. Okay, so if you are trading tomorrow, there is our weekly unemployment claims, and you have your US final GDP quarter over quarter coming out tomorrow. If you are going to trade Europe, I'm 50-50 on trading Europe. I have a really bad headache right now. I don't know if I'll be able to get up again at 2 in the morning to do it. It's been really shitty volume as of late. The last 2-3 London sessions have been absolutely horrible. So maybe there might be a little bit of a rebound off of today's massive sell-off in the markets. But again, if you are going to trade it, please trade with responsibly and proper risk management. And then when we go into Friday this week, end of the week, just a core PCE price index and some Canadian news. And I will be back Monday with you guys. We'll do Monday to finish off the year over here. We'll do Monday. It will be like our last trading day before the holidays, and then we'll take a little bit of a break, and then we'll see you guys back in the new year. So we'll go through this. It will be a Monday morning session coming up with all of you guys. Okay. Earnings. Make sure you guys go through your earnings as well. Don't neglect your earnings. Tomorrow, Thursday morning, let's take a look. Thursday morning, any big names? Not really big names that can maybe impact the markets. Thursday after hours, we got Nike, FedEx, BlackBerry. Okay, if you are trading those, I like to trade Nike and FedEx, so I'll be watching those. Carnival Corporation Friday morning, and then nothing Friday evening. Okay, guys. Discord signals, they did really well today. Few setups over here. Gold. Wow, look at gold. Okay, gold. Big drop in gold. Why? Because a strength in the US dollar saw gold. Runners are running, like this guy right over here. He's running. So if you got runners in the market, they can kind of bank you some money. So if you can, guys, think about runners. Okay, scale out if you are in profit a little bit. You don't need to close your entire position. Close out 50%, 60, 70, 80%, and leave the rest running. And you never know, like a day like today, if you hit the sell button and you left runners, you would be very happy right now. And gold just absolutely dumped below 26.45, and then with the FOMC news, really dumped, guys. Okay. And we have some good blogs over here at SST. 2-candle rejection, finding fair value gaps. What is the US dollar and DXY? We just talked about that last week. So why was the US dollar so strong today, and why did everything, see how everything kind of reacts with the US dollar and what the US dollar is doing. So lots of blogs here, guys, for you guys. These are all free blogs. Sign up on our website and you can get these free blogs. And pinned at the top of the YouTube for all of you guys, if you're on YouTube, pinned at the top is our free Telegram channel. This is our YouTube channel right here. Runners are running, and before and after of the trade ideas. And guys, I took a quick scalp on MicroStrategy today. Right over here. This thing is a scalper's paradise. If you guys do enjoy scalping these big names, I love this thing. So I took 2 positions. I took my first position. I bought 125 shares, and then I added on a dip another 75 for a total of 200 shares, and then I closed them out. I was looking just for a modest gain of 1%. I think it was 1.4, 1.5% I closed out for almost 1400 US. And that's it. That was the trade of the day. Could I have got more? Could I have got? Yeah, I could have, absolutely. But that was good enough. Get that 1% per day can financially change your life. What we preach and teach here, guys. Okay. And this is our journey of the trader. Okay. So this is what I want to talk about. We're going to talk about right now. Before we start, I want you right now to please think about this. So your beginning years, or your beginning stage or phase of a trader, is your initial challenges and foundational learning. Okay, and these different phases can be different for everybody. You don't need, the beginning doesn't need to be 1 to 5 years for most traders. It can be 1 year. Some traders pick it up fast and they can do it in 6 months, 3 months. You know, everyone has different levels. Okay, so that's what we're going to talk about. But this is traditionally, if you're looking at a 20-year journey of a trader, this is how maybe they go about it in these 5-year increments. But again, if you're a fast learner, you could spend your entire journey 5 years and get this entire thing. Some of you guys maybe in 1 year can do this. You know, everybody's different. And then that's the beginning years. The next phase or stage is the turning point. So this is traditionally years 6 to 10. Key moments that pivot a trading career. Okay, so these are your key pivots. We talk about pivots in the market. This is where it could be your aha moment and things are starting to click and make sense. And then this is where you can actually start to learn from all of your beginning mistakes in your beginning years. And then you're going to experience a growth phase. Everybody who passes the beginning phase and then the turning point will have a growth phase. Maybe some of you guys are going through it. Some of you guys maybe are not at the growth phase yet. But traditionally, this is your 11th year to 15th year for the growth phase. And this is your significant development and you're enhancing your skills in trading. This is where you're learning a lot more than just like price action or technicals or fundamentals. This is where now you're learning how to do other things in the markets, not just Forex or futures or stock or options or crypto. You're learning more. Maybe now you're learning about investing and passive income and learning those things. Then finally, your last stage or phase is the resilience phase. So this is mastering adversity and sustaining your success. Okay, so to be a long-term trader is you got to sustain your success. You don't want to just keep giving back all of your profits and just keep going through the beginning years over and over and over. You need to strive to get to the turning point, the growth phase, and then finally resilience, where you've mastered your adversity. You know, like today, FOMC, I kind of mentioned to you guys in Discord that maybe just take it easy today. Just watch the markets. If you're not on the sell side today, you got ruined. Like I'm being straight up with you guys. If you didn't hit the sell button today and you were just buying or thinking of buying, you got ruined. So maybe just walk away from FOMC today. Maybe the markets might be trading a little bit better tomorrow. And then sustaining your success. Okay, so that's the webinar we're gonna have. I want you guys to think about those phases now, and maybe think about what phase you're at right now. Okay, I don't care how many years you've been trading, whether you've been trading for 30 years, 20 years, 10 years, 5 years, or 1 year, or this is your first month. You're gonna go through one of those stages or phases throughout your journey, okay? And I want this to be your journey. Don't compare your journey with someone else. This is personal to you. But everything I talk about, you might understand a little bit about it. And also, each phase is traditionally about 5 years. Each stage is traditionally 5 years. Some of you guys in the beginning stage might not take 5 years. Some of you guys might learn that stage and move through it in a year. If you do that, then you're going to advance to the next stage. You might learn that entire 20-year journey in less than 5 years. Some of you guys are really, really smart learners and understand this and very disciplined, and you understand your risk management, and you're really serious about your trading. Some of you guys can do this in 3 years, 2 years. I've seen guys do it in 1 year, get through this entire phase, and they're sustaining their success, and they've battled all their adversities because they learned quickly. Journaling, all of those things. They learned fast and corrected their mistakes. Okay, guys? So let's get started. First thing we're going to do is we're going to hit the record button. Okay, I just want to welcome everybody. Thank you for joining. Let me hit the record and we're going to get going. Okay, so thanks, guys. We'll go for 1 hour, 90 minutes. Maybe it might be a 2-hour webinar. We'll see. It's a really important one, and I hope one of you guys at least learns something from today's webinar and uses it going forward. Okay, so let me just hit the record. Let's have some fun. Let's learn something, and let's see how our journeys are in trading.
Recording in progress.
Okay, welcome, guys. Thank you guys for joining our weekly webinar. My name is Ron. My partner is Dave. Welcome to Stock Sniper Trading. Tonight's webinar, what we will be talking about and discussing is the journey of a trader. Okay, and this can be a short journey, it can be a long journey. Everyone will go through different phases and stages throughout their journey. Some of you guys might take longer than other traders, and some of you guys might get through these stages at a faster pace. This all depends on you and how fast you learn, and how fast you can learn to fix your mistakes, and how much you can continue to learn in the market. So everybody's journey is going to be completely different. This is kind of just just a traditional 20-year journey for most traders, and breaking it down in 5-year increments. And we'll talk about each one of those phases. So just if you can think right now, before we even get started, where are you in your journey as a trader, or just where are you as a trader? Are you seeing a little bit of success and you've fixed your mistakes and you're progressing? Are some of you guys just still struggling and can't seem to get it together, and you keep struggling and struggling and struggling? For some of you guys, you might be at a beginning phase where you're just now learning. You're not really trading the markets. Maybe you're on a demo, maybe you're still educating yourself. And some of you guys might be at the mastery stage where now you're learning how to invest your profits and get a bigger return on your money, learning about passive income and all of these things we'll talk about. So everybody on Zoom, thank you guys for joining. Arman Prashindetia, thank you for joining. Thank you, bro. David, how are you? Thank you for joining. I'm just reading some of you guys right now. Some of you guys are not trading, you're taking the month off. For you, David, it's a beginner and you've been in it for a year and you took off today because of the news. Perfect. That's good. Now, David, just learn about FOMC's volatility today. Can see how the markets can really get volatile just like that, in 1 hour, in 30 minutes, in 5 minutes, in 1 minute when they announce news. When you're going to go through a lot of red folders. There's 8 FOMCs a year. There's NFPs, there's GDPs, there's PPIs, there's CPIs. There's all types of red folder news throughout the months. So we need to understand, will we be trading these red folders? Should we be on the sidelines? Should we reduce our risk? All of these things together. If you're in swing trade positions and you're going into the news, what should you be doing? Should you be trailing your losses? Should you be maybe closing out those positions? All of these things, there's so much to take in. Vic, don't sacrifice sleep for lunch. No, I know that. I know that. I don't. I'm going to try as much as I can, but it's not easy. My sleep this week has been struggling to try and get up at 2 in the morning, because sometimes I don't even sleep, and sometimes when I do go to sleep, it's midnight. So it's not really sleep. It's just a quick little nap and get going. But we'll play it as we go along. But the volume has not been good in London as of late, like the last 3 sessions I've done. So maybe it's just end of year volume and things will pick up in the new year. Saleh, thank you for joining. Samuel, thank you for joining. I appreciate you. Ricardi, welcome. Noor, how are you? It was awesome. It was awesome. Yeah, it was a good assembly. Thanks for asking. Yeah, she did great. She was the Christmas tree. Yeah. Did any of you guys ever do when you were a kid, those type of Christmas plays and things like that? And it was fun. I had a good time there, and it was at the time when FOMC was on. So maybe I saved some money by not trading FOMC and had an excuse to get away from it. But everyone on YouTube, thanks for joining as well. Jeff Smith, you had a loss. You lost a lot today. Unfortunately, it happens, bro. It happens. I want you to understand that you're not the only one. You're not the only one. Okay, I've lost a lot on FOMCs. I'll be the honest truth. I've blown up accounts. I've lost a shit ton of money on FOMCs. I high leveraged and I was on the opposite direction, and all of a sudden I'm buying in a huge red candle and hit my stop loss and I lost everything. It happens. But now what we got to do, Jip Smith, is we need to learn. We need to learn. We can't get the money back that we lost today, but what we can do is we can learn to not do this again at the next FOMC, or learn from the mistakes. Walk through your day. What led you into what happened today. Okay, there's always, we got to go back and process the information. What happened today? Did you leverage too much? All, did you keep adding to losing positions? There's multiple variables, but we can figure it out together. But you need to do this on your own as well. I'm here to help as much as I can, but I can't be with you guys 24 hours of the day. So you got to take this and learn a little bit on your own. So I just want you to know, don't worry, we've all lost. Hopefully it wasn't a large loss, to your account. What will happen with the markets tomorrow? I don't know. Like, it's hard to say. Will the markets consolidate tomorrow? Will they flag and then they keep dropping? Will there be a little bit of a bounce to the upside? But there's a lot of supply now the buyers have to fight through, because there was a big drop. There's a lot of supply in the market. So even if there is buyers tomorrow and it looks like a nice green day, you got to understand that they're still buying into resistance, and the sellers can just step right back in, absorb that volume, and continue dropping it. So we need to figure out where there's a good, strong foundation of support. We got to figure out where our resistance is. We got to go back to the charts. We got to start doing top-down analysis and looking. And again, it's hard to say what will happen tomorrow. The time of the year where it is. The markets now are going to absorb what Powell said today, and we'll see tomorrow. Okay, everything is, you got to do a top-down analysis and start fresh every single day. Luke, welcome. Good morning. Hurst, thank you for joining. I appreciate you. Thank you for joining. Thank you. Ghost Boogie, welcome. Thanks for joining. I appreciate you. Amazing. Since watching our channel, you've been trading with precise entries. Tape-to-tape trading is where it's at. I'm going to agree with you. I love tape-to-tape trading. It's kind of my style of trading. We did a nice webinar on tape-to-tape trading. I'm a big believer in pipping and dipping out of the markets. Get your money and get out, because, if you can't always assume that your trade is going to continue to go up and up and up and up. Sometimes the markets pull back. So I don't take money for granted. We work hard as traders to do this. It's tolling on us mentally, physically, emotionally, everything. So I don't ever have any regrets in the market. If I take out money and then it continues to move, I don't let that bother me. I'm blessed that I made some money and I can continue to look for another trade. That's just how my brain operates, guys. That's my journey of a trader. I found that when I was holding a lot of trades and I wanted more and I wanted more, it ended up retracing back to my break even, and then I started to figure out how much money I was leaving on the table, and I started to add it up, and it turned from hundreds of dollars I was leaving on the table to thousands of dollars on the table. And then I said, I'm not okay with this. I trade to make money. So I started to figure out how I can take money while I'm in profit. You don't need to close the entire trade, but you can start to scale out, like trail your stops, or close a portion of the trade, take partial positions out. So once I started to learn that, I've never looked back. My account over the years has continued to grow and grow and grow, with losses on the way, but continuing to grow the account. So that was just my personal trading, my personal story with you, my personal journey. Maybe some of that is not, you're not going to trade that style, but again, that's why the journey of a trader is your journey, not my journey. It's your journey. So you got to figure out what works best for you. Okay. Okay, guys, so let's get started. So think about right now where you are as a trader. What stage are you at? What phase are you at? And I'm going to break these stages and phases down, and we'll talk about each one. Okay, so let's have some fun, and let's learn something. So there is this phrase, slogan: trading takes 5 minutes to learn and a lifetime to master. How many of you guys have heard this before? It can be with anything, like playing basketball. Playing basketball can take 5 minutes to learn, but a lifetime to master. Like, if you want to be Michael Jordan, you can go outside right now for 5 minutes, learn how to dribble a ball and shoot, but you're not going to be a professional basketball player in 5 minutes. It took Michael Jordan majority of his life, half his life, to be the greatest basketball player of all time. So even trading, we can learn trading in 5 minutes. Like I can teach you right now in 5 minutes a bullish candle, a bearish candle, a support area, a resistance area, tell you you buy at support and you sell at resistance. We can learn that in 5 minutes. But it's going to take you a lifetime to master that skill because there's so much variables in between what can happen. There's volume involved, how much volume is in the candles. There's fake outs that can happen. There's liquidity sweeps. There's leverage involved. How much are you trading? What capital? All of these variables that can come into the market and play, but will take you lifetime to master. And what I mean by lifetime, 10 years, 20 years, 30 years before you can master these skills. Okay. I love that. Paul, you're finally getting above break even. That's amazing. You know, you telling me that, Paul, now I know where you are in your journey. So you were struggling a little bit, you were taking losses, but you've recovered. So, and then now you're a little bit above break even. So, you know, going back, look back at all of that past, you know, where you were struggling and losing, and now reminisce about how you recovered and you came back to break even, because that's where you're going to learn from all of those mistakes where you were in drawdown, and that will help you going forward. So I just want to say congratulations. You know, that's big to come out of drawdown. And I mean drawdown not as just in one trade. I mean maybe that drawdown lasted for 1 year, 2 years, 3 years where you were in the red. And now you finally recovered out of that and now you're a little bit above break even is respectable. So I want you to know that that's like a phase that going through as a trader, that you got to look back and you got to really respect what you've done, where you've came from, and appreciate that, and that will take you to the next level. So Paul, thanks for sharing that with me. I appreciate that, bro. Congratulations too. That's amazing, guys. I love that. So that's where I like the chat to get interactive. You know, we can all help each other out, guys. You know, get interactive in the chats, whether it's in Zoom, whether it's in YouTube, whatever it is. You know, don't always just listen to me. I like to have conversation and make these calls interactive. You can see it's already like 10 minutes and I haven't even started the webinar, but it's good discussion that we're having before we even get into here. I don't want to make it look like trading is just all about making money and all of you guys are going to be financially free and all of you guys are going to be millionaires. I don't want to assume that and start calls like that, because not everyone is going to do that. A lot of you guys are going to be struggling. A lot of you guys are going to lose money. A lot of you guys might not see profitability ever if you continue doing what you're doing that's causing you to lose money. Okay, guys. Sergio, you've struggled so much too. Okay, well, this is where maybe, Sergio, we got to put an end to these struggles, okay? We have to say this is enough. Enough is enough. We got to now figure out what we can do going forward into the new year, Sergio. 2025 is a fresh start for everybody. And I hope everybody understands why I'm doing this webinar at the end of the year, because I want everyone to think about where they're at over the holidays and then come fresh starting in the new year. And it might be the best year you've ever had in 2025. I hope for everybody. Inshallah, I hope for everybody. Okay? And let's just continue, okay? So we're going to start this. The journey of Brian, and you see Brian is in quotation, okay? Quotation Brian. So I'm just going to use a generic name and we're going to talk about Brian's journey as a trader, okay? And you guys can kind of put your name in here, whatever your name is, and think about where you are at in your journey, okay? So this is a journey of Brian the trader. Let's talk about the intro. So Brian's journey in trading began 20 years ago, 2 decades ago, fueled by curiosity and the desire to achieve financial independence, okay? So I guarantee you 99% of you guys here that are here today, you trade because you want some sort of financial independence. Am I correct or am I wrong? Maybe some of you guys are doing it for different reasons, but the majority of you guys, including myself, I trade for financial independence. I do love the passion of trading. I do love watching candlesticks, but the reason why I do this is to be financially independent and be in control of my destination. So hopefully, maybe that's what's fueling you guys. But this is what fueled Brian. Over the years, he experienced triumphs and setbacks, lessons learned, and valuable insights that shaped him into a skilled trader. So, how many of you guys have experienced triumphs in your trading? the highs, the lows, everything. Okay, so remember, your journey, you're going to have some high days where you're loving life and you're making money and everything you're doing is you're buying all the pullbacks and it keeps driving, and it's just you're nailing trades with minimal drawdown and life is good and you're on top of the world. Those are your triumphs. But then you're going to have some setbacks. There's going to be days where you're like, what the fuck's going on? I can't seem to figure this out. What was working last week is not working this week. I just gave away all of my profits that I made and I just gave them back. So you're going to have setbacks in trading. I want you to know that this is natural. Okay, it's part of your learning process. Okay, you're going to learn from the highs and you got to learn from the lows. Just like a candlestick, like today. Today was a big red day. It's lows. So there was a lot of traders who were on the wrong end of today's volume, and this is their setback. But on the flip side, there was a lot of traders who hit the sell button today, and they're right now they're loving life. So every trade has an opposite reaction. Okay, so when you're winning, someone is losing. When you're losing, someone is winning. Okay, so you're gonna have triumphs. You're gonna have setbacks. Lessons learned. This is where I believe that a lot of traders are failing. They're failing to learn from their lessons. They're not taking this serious enough. When they have their setbacks, it's just a setback, and they're not learning from this. They're not processing what happened. Maybe I need to take a couple days off of the market and learn from what happened here so that I don't repeat this in the future. I feel like there's a lot of traders who are not learning from their losses. They're not gaining any valuable lessons. They're just trading the next day, and then they're revenge trading, and then they're pissed off, and then they got to get back what they lost. And they haven't learned what caused them to lose that money. Okay, and Jip Smith, I'm not picking on you, but you said today you had a bad day in the markets. So and already you're asking me how are the markets going to trade tomorrow. So I can see like your mindset right now. You need to go back and you need to learn everything that happened today so that you don't fall victim of this again tomorrow. Forget about the charts tomorrow. Forget about Friday. Forget about trading the rest of the week. You need to go back and figure out why you lost today. And don't worry about what's going to happen tomorrow. Because if you don't learn from how you lost today, you're probably going to lose again tomorrow. You're probably going to lose again Friday. Unless you want to continue to give back to the markets, that's up to you. That's your personal decision. I'm just trying to give you feedback, constructive criticism to help you out. I'm trying to give you my honest opinion. And I'm not doing this to pick on anyone. I'm not doing this to I'm doing this to help, guys. You got to understand what I do here. You need to have some constructive criticism. You need to hear this from somebody. I wish someone was in my ear every time I kept losing and revenge trading and saying, Ron, walk away from the markets. Ron, stop. This would have saved me thousands of dollars when I was in my learning phase. Okay, guys? So anyone, if you take a loss on a day, go back. If it's just one trade you lost from and you got stopped out, go back and learn from it. I got stopped out in London the last few sessions, and that's why I'm thinking about, should I be trading London later tonight? London has shitty volume. I already took a loss. Do I want to come back? Maybe I gotta study London for a little bit. Maybe I gotta take this weekend, study London. I haven't traded London in over 6 months. I'm more trading New York and post New York. So maybe it's just me. I'm a little bit dusty, a little bit rusty. That I gotta go back to the charts and figure out how London is moving. Maybe that's me learning from my mistakes, learning from making it into a lesson. So that's what maybe I got to do. That's why I'm trying to be the bigger person and walk away from London. Not that I'm lacking sleep. I don't care about that. I can go 24 hours without sleep. You guys know me. It's just I gotta figure out how London is moving. I gotta get back into the rhythm of London. I gotta find out what securities are moving. Right now I'm sticking with DAX, the German exchange, and we're going to gold. Maybe I gotta start off, we gotta go to Euro USD, see how the or the pound, see number one how the currencies are trading in London, and then we can start to move into commodities, then we can start to move into index, all of these things. This is how my brain operates. It's always learning and processing, learning, processing what works, what doesn't work, and how we can make it better. Okay, this is just me. I'm telling you about kind of my story about how I learn. So I don't know how you guys learn, but if you just go right back into the markets off of a losing day, I'm telling you, it's not going to be productive. You have a high probability of continuing to lose. So do you guys understand that, what I'm trying to make? Before I even go to the next slide, you got to understand what I'm saying in order for me to go forward. Because if you guys don't understand this, you guys are not going to understand phase 2. You guys are not going to understand phase 3. You guys are not going to get to phase 4 of your trading journey if you don't understand this concept right now. Okay. So Brian's story is not just about financial success. It's a narrative of resilience, growth, and unending quest for knowledge. Okay, so I always told you guys from day one, whenever you join SST, I don't know when it was, maybe it was 5 years ago, maybe it was today, you need to be resilient in these markets. You got to have tough skin. You got to be able to, withstand losing and do it in a positive manner. Okay, you're all going to take losses. I take losses, you take losses, we all take losses, but we have to be resilient to continue to come back. It's not easy. Like for Paul on YouTube, who just finally recovered from and coming to break even, he is resilient to recover from that. Like, I can say this, and I haven't met Paul, I have no idea who he is, but just from what I understand, from how he battled to come back from being at a loss, that shows resilience. All of us are going to have to possess resilience at some time in your journey. So it's best to learn this early. The earlier you learn this, the better you will be off. If you take 10 years to learn how to be resilient, it's going to take you a long, long time to be profitable. You need to learn this right away. I'm telling you guys, I'm trying to save you guys years, and I'm trying to save you guys a lot of money down the road. Learn resilience. Okay, when you take a loss, you got to be resilient to go back and learn why you lost, and forget about the markets, forget about the next trade. Go back. How many of you guys are journaling? Okay, that's a thing that still boggles my mind. How some of you guys are still not even journaling anything. You haven't even journaled in years, and you wonder why you're still losing. You have to go back and reflect on your trading and learn from it. A journal is one of the easiest things to do this. Very simple. Some journals are already preset for you. You just got to input the information. You don't even have to do anything else, and it does everything for you. It calculates everything for you. It gives you suggestions on what you should be doing. And this is the work behind the scenes that it takes to be successful in your journey as a trader. If you fail to do this, you're probably going to fail at trading. And the unending quest for knowledge, be a student to the game. Be a student to the game of trading. I have said this every single day on these live calls. If you guys know me, I've been trading for over 20 years, and I'm still a student of the game. Today I was studying every single word that came out of Powell's mouth. I'm going to go back and rewatch the speech when I'm done this call. I'm going to go back and learn everything, because if you stop learning, that's the day you're going to stop trading. If you stop learning anything in everyday life, that's the day you're going to die. You got to keep learning every single day. If you're passionate about something, you're going to want to keep learning. Okay? So learn as much as you can. Be a sponge and take in everything. Whether it's from other traders, other mentors, other YouTube channels, other Discord groups, whatever it is, take everything in and process all that information and figure out what's best for you. Okay, so at the end of the day, this has to work for you, not for me. I figured out what works for me, and it took me years to figure that out. So be a student to the game. Okay, if you do this, you're going to love trading for the next few years. Hopefully it's going to be 20 plus years for some of you guys. Okay, so the beginning. what I was talking about, the beginning is traditionally 1 to 5 years. Okay, and remember, this is just general numbers. Okay, I've kind of broken down each phase and stage in 5-year increments, and someone might be at the back end. Someone might take 5 years as a beginner to finally learn the beginning stage. It might take someone 5 years, might take someone more than 5 years, but there might be also traders that learn this in a year. They get through this entire beginning phase in a year because they're resilient, because they go back and they learn from their mistakes, and they're hungry to learn, and they're passionate to learn, and they want more and more knowledge, and they keep studying on the weekends while some people are partying, or going out to the clubs. There's other traders who are just on the charts studying. So this is variable. Someone might do this in a year, someone might get through this in 5 years, someone might get through this in 3 months. Okay, so I don't want you guys to just look at this number. I want you guys to understand the phases. The beginning phase. So how many of you guys right now are in the beginning phase? How many of you guys think you've graduated past the beginning phase? So let me go over what the beginning phase is and talk about it, and maybe you'll understand a little more. So we'll talk about Brian, okay? Remember Brian's journey. So in 2004, in his 20s, so Brian was in his 20s, early 20s here, Brian was working as a financial analyst. Okay, so he had a little bit of a financial background. He was probably working in the banks and learning a little bit about finance. In your early 20s, you're young. You probably just graduated school and you're learning. While browsing online one evening, Brian stumbled upon a forum about day trading. So, if someone right now, there's kind of Reddit forums, there's all kinds of forums, there's Discords, there's Telegrams, there's all kinds of shit going on right now. But back then, there wasn't a lot going on. So finally, stumbled on a forum about day trading. The allure of being his own boss and the potential for quick profits sparked his interest. So how many of us, when we're young, when we see traders, quick profits, the get rich quick theme, and that's what I'm telling you, what fascinated me also about trading was I wanted to get rich quick while I was young. I wanted to make $1 million and retire when I was 25. That didn't happen. I lost a lot of money, but that's what kind of got me hooked, was that you could trade and make so much money and travel the world and live this life and and give back to your friends and family. But that's what kind of got me hooked, was that get rich quick. And I found out that was all bullshit, and I got sucked into that. So I found out that trading is not get rich quick. It's get broke real fast. If you don't know what you're doing, you're gonna lose your money real fast. So Brian decided to learn everything he could about the stock markets, or Forex markets, or futures markets, or crypto markets there is now. So keep learning, okay? So you have a spark. Some of you guys, if you think back to what sparked your interest in trading, if you all think back, what was it that triggered you? What was your spark to start trading? Maybe some of you guys have no financial background. What was it that got you interested in trading? Okay, what sparked you? And then you're going to go through a learning curve. Some of you guys are going through that right now. Some of you guys have graduated this learning curve. So Brian spent months reading books. Okay, read as much as you can. I like to go into my sauna every night and I relax in there for 45 minutes, and I'm always reading or listening to it. Right now you can listen to audio books. Just put it on and listen. Just absorb as much information as you can while relaxing. You'll retain more information. Watching tutorials, continue watching tutorials as much as you can. Join webinars and continue to learn. So Brian spent months reading books, watching tutorials, and analyzing market patterns. Okay, so we understand that price action dictates future moves. If you understand that past predicts the future, so you can kind of learn patterns, relatable patterns in the market. One I can think of at the top of my head, an easy pattern is a double bottom. Sometimes when you see a double bottom being created in the markets, you can kind of anticipate the next move. Does it happen always? No. Does it have a higher probability of any other pattern? Yes, it does. There is a high probability that it will break its resistance and continue to move to the upside, double, triple bottoms. It's not always, in fact, guaranteed, because there's other variables that can cause that. Maybe there was a double bottom that was created today in today's bearish market, and it didn't have enough to break the resistance and keep dropping. I was watching MicroStrategy today, and I could see MicroStrategy had some double bottoms because I scalped 2 trades today, and I saw it wasn't breaking the resistance. That's why I was scaling out in profit, and I was happy for it, because if I didn't, then it continued to come back down where I entered, and then if I didn't have break even, it would have went to my stop loss. So I'm just talking of a live example that happened today. But traditionally, if you can analyze market patterns and learn from chart behavior, you'll get through a learning curve. Brian opened a small trading account with a brokerage that offered a practice platform. Okay, this is what I would recommend if you're in the beginning phase of learning. Stop going real money. Stop going to prop firms until you learn how to trade. I had a one-on-one the other day with one of our snipers, and he is learning, starting off with a demo account. It was so nice to hear. It was music to my ears, because I haven't heard that in years with traders. Not too many traders want to go use a demo account. And I asked him, I picked his brain. I said to him, why are you choosing to do this with a demo account, not go real? He said, Ron, I want to learn first how the markets move before I put my own money into the markets. And it was a breath of fresh air to hear that, because I have not heard that in years. All I hear is guys saying, I want to make money and get rich quick, and I got $10,000 and I want to go into the markets right away without even learning. So, what do you want me to say to them? I can kind of anticipate that they're going to probably lose a big chunk of that money with no education or anything. When you don't even know your risk management, it's just a recipe for disaster. So it was nice to hear someone starting off with a demo account in a practice platform. The platform is live. You can go live. The markets are moving live, but you're just practicing with demo money, so that you're learning. You're more engaged in learning as opposed to watching your profit loss, whether you're in profit or you're in the red. Everyone is different. Some people don't believe in demo. Some people believe in it. Whatever is your personal business, that's on you. I'm just trying to say what works well getting through a learning curve. Armed with the knowledge Brian gathered, he started with a modest amount of capital. So a modest amount of capital. Everyone says, Ron, how much do I need to start the markets? It's all relative to what you want to get out of the markets. But to get started, you need minimum like $1,000. If you want to do make a significant return, $1,000. If you're anything below $1,000, you're in a learning phase. You're learning. You're not going to turn $1,000 and make $100,000. You could, but it will take a long time. As opposed to if you started the markets with $50,000, then yes, because it's all about a game of percentages. So 1% on 50,000 or 1% on 1,000, you're still gaining the 1%, but you can see the person with the more capital with 50,000 is making more money. So it's all a game of capital, but you need to learn percentage wise. Like the trade I took with MicroStrategy, I showed you a 1.5% return. 1.5 is my goal, 1% per day, but it yielded a little bit more profit because I was trading with a larger capital, trading that security. So how much you start with, that's your business. Whether you go with real money, whether you go prop firm, that's your business. But you need to get through a learning curve of learning the education of trading. Next are your first few trades. Okay, so you'll learn a lot with your first few trades. You might learn a lot with your first trade of the day. My first trade of the day teaches me a lot. That's why sometimes 90% of the time my first trade of the day is a feeler trade. No matter what the situation is, no matter what the setup is, I go in relatively small. Why? Because I want to get my feet wet and just test and get a feel of how the markets are moving. This is just a strategy that I do. I've incorporated this into my style of trading for multiple years, and it's helped me understand that sometimes when I take my first trade, that's a trade that was, when I was going back to my journal, that was a trade that was hitting my stop loss. So I started to think, how can I change this? How can I change the psychology? Still take a trade, but not give back too much to the market. So I started to incorporate a smaller size. A feeler trade is what I call it. This might be a fifth or a tenth of the size that I normally take. And it's just to get a feel of how the market is moving. If I do get stopped out on that trade, it doesn't go against me on my profit loss because I'm still just, it's not a big loss to the day. I don't even consider that to be like a loss. Psychologically, I consider it to be a loss. But I don't let that really affect me, because if I went in with my normal size and I lost that on the first trade, that would affect my entire psychology to trade the rest of that day. I would be maybe hesitant to take a next trade because I took a large loss and it's maybe the first 30 minutes of the day in, and I might miss out on really nice volume later on. So that was something that I personally learned with my style of trading. I'm a scalper, so I take a lot of trades. So I found that psychologically my first trade of the day really set the bar. It's like in a baseball game or a football game or a hockey game. The team that scores the first goal, the team that scores the first touchdown, the team that hits the first home run really dictates the momentum of the game. If you guys play sports, you'll understand what I'm saying. Like if we're watching a football game and a team marches down the field on the first possession and scores a touchdown, that really dictates the game, and sets a tone for how that team will move, and then for the opponent. So trading is the same way. Your first trade sets the tone. If you take a first trade, even my feeler trade, if it goes to profit, I gain confidence to continue to trade that day. I'm understanding the move of the market. I'm understanding how it's moving. Now I can trade with that momentum, and then I can start to step up the sizing. So I'm just trying to walk you through what worked for me, what doesn't work for me. Maybe you guys understand what I'm talking about. Maybe what I'm saying will help you guys. Maybe a lot of you guys are struggling right when you start your day of trading. So this is something to think about. You know what I mean? Maybe take a feeler trade, your first trade, and see how it goes. And then let me know after 1 week, after a month, say, Ron, this helps. Ron, this doesn't help. I'm always here to help, correct and fix things. But for some of you guys, it does help. It's helped me tremendously. Okay. So for his first few trades were exhilarating. When you first start trading and then you start, oh my God, I'm in profit. Holy shit, I'm going to be a professional trader. I'm going to take over Wall Street. All that. We went through that. I thought I was going to take over Wall Street when I first started trading. Was I wrong? Brian made a couple profitable trades with tech stocks. Okay. So, you might be trading tech today. There's some big names in tech: Nvidia, Apple, Amazon, Tesla, Microsoft, Google, MicroStrategy. So those are some big tech names. It's exhilarating when you take a trade on one of those big tech names and you make some profit. So you're feeling on top of the world. However, the excitement led Brian to ignore his initial trading plan, because you're in that moment of you're so excited when you made that trade that you forget your trading plan. That's why it remain laser focused. This is a business. Okay, a lot of you guys don't trade just to have fun in the markets. I know we love to have fun in the markets, but you got to treat this as if it's a business and not the casino. Okay, this is not a time where you jump up and down when you make a trade and you're jumping up for joy, because you might forget what you got to do next. Okay, at a casino, when you make a lot of money, you're jumping up in the jackpot and it's making all those noise and you're going crazy. But that's not the way how you do it in the markets. You got to remain professional, and if you make a profitable trade, that's part of the plan. That's perfect. Now let's figure out our next move. But beginning traders, you see the excitement, and then they ignore their trading plan. And then started chasing securities and ignoring risk management. I've done that. You've done that. Some of you guys did that today. Maybe you first started off excitement today before FOMC, and you took a few trades, and you got sucked into the momentum and the volume, and then Powell came out and dropped the hammer and dropped the markets, where you were ignoring your risk management, where you were ignoring your entire trading plan, all of those things. So maybe you started off today doing really well. You forgot to trade with a stop loss. You forgot to trade with a trailing stop. Maybe you forgot to reduce your risk going into FOMC. All of those things are characteristics of ignoring your trading plan. So you got to understand, the earlier you can learn this, the better off you will be. Okay, so let me just grab a drink here, guys, and you guys process that information, talk amongst yourselves while I have a drink here. Vic, do I pump myself up playing the national anthem before trading? No, but I should. Yeah, maybe we'll do that. Live London, we'll do O Canada before we start trading. If Trudeau resigns, yes, then we'll play the national anthem and we'll be back excited about Canada. Guys, any questions before we continue? Just seeing here. Sorry, guys, I'm just reading the chat. Okay, let's continue. Okay, the downfall. Okay. After a few months of early success, the market took a downturn. Okay, so this you understand that markets can take downturns. Okay, and this will affect you as a trader. I right now the market is not really in a downturn. It's been very, very, very bullish as of late. Today was a first like red day of multiple weeks and multiple months in the U.S. markets. So you are gonna experience downfalls, not in your personal trading, but in the markets, the financial markets. So how do you pivot? How do you adapt to this? So after initial few months of early success, some of you guys in the group, I've talked to you guys personally. You guys have had 3 months of steady success, 6 months, 1 year. Then all of a sudden the market changed and you could not figure out how to adapt to the markets. So after a few months of early success, the market took a downturn. Brian's lack of discipline caused him to lose a significant chunk of his capital. He made emotional trades based on fear and greed. Remember, we've got 100 webinars we've done on emotions, especially fear and greed. How to learn how to handle fear and greed in trading. And if you guys remember, in 2007, I remember this vividly because I was trading in 2007. So Brian faced his first major setback, wiping out nearly half of his trading accounts. So this was when the market took a big financial dump right here in 2007. So there was a lot of traders who did really, really well leading into the financial collapse, not knowing what would happen, and forgetting their trading plan and giving back all of their gains for multiple years. This affected multiple traders, investors, hedge funds. Wall Street got kind of liquidated. This was a big downfall in the markets. Will we ever see a correction like this in the markets in the future? Absolutely. The markets can correct themselves anytime. All you need is a black swan event and the markets can turn. So if we have, like, let's say tomorrow, if we have a black swan event and the market starts, do you guys have a plan? Do you guys know how to trade a bearish market? Do you guys know how to adapt? And have you guys learned from your previous red days how to handle these? Today was a very red day in the markets. Look how many points Nasdaq, S&P, and Dow Jones fell today. Do you guys have a plan as to how to trade tomorrow, how to trade Friday, how to trade next week? So you got to understand that markets are cyclical. They got bullish moves. They trade sideways, and then they have strong downfalls. So if you guys remember 2007, this was a downfall in the market. So if you were trading at this time, what did you learn from it? I learned a lot from this. I learned where I gave back a lot of my capital because I didn't really respect 2007. I didn't really expect it to collapse that hard, that fast. I thought it was going to be a gradual thing, and I was wrong over here. But I recovered and I learned from it. So if there's ever another event like 2007, now I'm prepared for it. I understand how to trade it, and I've learned from it. And then your next phase is the turning point. So I have here, this is the second stage, phase 2. This might be, so your first stage might be the first 5 years of trading, what I just talked about. You might go through all of those stages in your first 5 years. Some of you guys maybe only take 1 year. You'll get through it. Depends how fast you learn. But then stage 2 can be traditionally years 6 to 10. So some of you guys are in this stage right now. You guys have been in the markets for 6 to 10 years. So you might understand what I'm saying here. So you're going to have to go through this phase and stage where it's re-evaluation. Okay, some of you guys are going through this right now. Paul on YouTube right now, he's going through this re-evaluation phase, in my opinion, right now. He was having a setback and he recovered now where he's a little bit above break even. So this is where he personally, I'm talking to you, Paul, where you need to reevaluate right now. So this is where you were feeling defeated, but in our case, Brian took a step back. He realized that his approach lacked structure. He decided to reevaluate his strategy, focusing on risk management now. He learned that protecting capital is as important as making profits. During this introspective period, he also began to read about successful traders and their journeys. Okay, so maybe right now, Paul, I know I'm picking on you, but this is maybe where you previously felt defeated, but you came back, and now you need to realize maybe you lack some structure in your previous trading. Now you got to learn structure. You got to learn a little bit of a foundation, and you got and decide right now how to reevaluate your strategy. So what type of strategy, what type of trading were you doing before that caused you to go into that drawdown? And reevaluate what got you out of there. What bounced you back? What were you doing differently that made you recover all of that, those losses? So this is where you need to reevaluate your strategy. You need to reevaluate your approach in the markets. Everyone is going to have to go through this phase at one point in another. Some traders take 6 to 10 years to really evaluate their trading and start to take it serious now. So if you put 6+ years in the markets and you're still not profitable, you need to reevaluate your approach. You cannot just keep giving money back to the markets. Money is, you work hard for your money. It's not just donating every single day to the markets and you're okay with it. No, every loss you should be wanting to learn. Why did I lose? What can I do better? And reevaluate it. That's why every trade you should be reevaluating. That's why journaling is so crucial into your trading. This is where now traders in 6 to 10 years, the turning point, they start to take risk management more serious. Now you're not gambling anymore. Now you're actually trading with like 1% per day. I still see everyone on YouTube and sometimes in Zoom, some of you guys are trading with too much risk. You're risking your entire capital on FOMC, and it's driving me crazy. My head, I've taken 10 Advils today because my DMs on Discord were blowing up with traders trading with ridiculous risk, and I cannot take it anymore. I'm gonna have to take a week off of just what am I saying every single day? Risk management, guys. If you don't take this shit serious, forget about trading. Forget about it. I'll save you time. I'll save you time and money. Just quit trading right now. If you're not gonna take risk management serious, you got no business trading. I'm sorry. Unless you want to gamble every single day, that's your business. I would rather you go to a casino and gamble than do it in the markets. At least you have a better chance of winning in the casino if you're going to gamble. Go put 50% of your money on a roulette table and choose red or black. You got a 50-50 chance of winning, unless it goes green. And with my luck, I'll probably get green. Okay, so Brian learned that protecting capital is as important as making profits. Let me read this again and just listen to what I'm saying. Protecting capital is as important as making profits. Do you guys understand what that means there? I know it's a short sentence, but it's powerful. So like every single day, if you make profit and you continuously protect it, your account will slowly start to compound and grow. If you're a reckless trader and you keep giving it back and keep losing, you're never going to get to this point where you're protecting capital, because you're always losing money and you're always depositing money. This is the stage where you got to get out of, guys. Okay? And then slowly you'll start to see your account growing, and it should give you the confidence to say, I want this. I want more of this. This is nice to see. My $1,000 account now is 1,200 and I'm protecting it. And maybe I have a $50 loss the next day, but that's it. I stop. If I lose $50, it's still $11.50. I'm up $150. I'm protecting my profits. And then the next day might be a nice good day, and then you turn it to 1,300. But then you have another shitty day the next day, and you only give back 50 or 75. But it's slowly, you got a curve, like a uptrend. You're making higher highs and higher lows, higher highs and higher lows. But if you don't protect your profits on a daily basis, weekly basis, monthly basis, yearly basis, you're going to continue to go into drawdown. And then you're going to have to deal with the emotions and the psychology that comes with drawdown. A lot of professional traders do not know how to deal with drawdown still, like myself. I've been in this game for 20 plus years, and sometimes when I have a really shitty day, sometimes I lose control and I do silly things. Like it happens. It happens. I'm not going to say that just once you get out of these phases, that's it. It's clear sailing. No, everybody has days where they have a bad day, and it's just one of those days where you want to forget about it, and you're like, why did I even trade that day? I could have done some other things. Like today, for example, I went to my daughter's Christmas assembly. It was starting at 1 p.m. in the afternoon. I missed FOMC entirely to be at my daughter's event. I wouldn't miss it for the world. But I'm thinking, if I missed my daughter's event and I was trading FOMC and I was on buys today and I got hit with like a fake out and then I continued to buy, it could have been a disaster of a day trading. So I look back and I'm so thankful that maybe I could have also sold the market today and made a lot of money selling. But I don't play those games, the woulda, shoulda, couldas, this, that. You gotta trade every single day with a plan. I planned today before I even woke up that I wasn't trading FOMC. I made that decision, so I can't look back and say, oh man, I missed out on so much money because I could have been selling the market today. That's not part of the plan. You cannot look at that. You got to look at the physical, what happened if you are trading that day. And what had happened is either some of you guys made money or some of you guys lost money today. And if you did, you have to learn. Even if you made money, if you were on profitable trades today, why was your bias to sell the market today? Traditionally, when there's a drop in interest rates, it's good for the US dollar, which it was. We saw that. Normally, the indices follow with that and see an injection of volume. Today was the opposite. What led to that? There's always questions. Maybe the market peaked and it was at its high, and it's just a time for it to cool off a little bit. Maybe there was a lot of profit taking at the end of the year. There was a lot of big profit. Tech cooled off a lot today, so there's many variables of what it could be, but continuously learning will help you guys. Okay, so also, what in the reevaluation phase, you can also begin to read and learn about successful traders and their journeys. So like I'm sharing you a journey of Brian over here. I can share you my journey. I'm telling you about my stories as a trader. So I was learning too in my younger years. I was following some successful traders and following their journey. And everything that they were saying was risk management, risk management, risk management. I used to, and I still do, listen to Steve Morrow from Beating a Market Maker, and his continuously stress is risk management. That's when I started to take risk management more serious, and I was a person that was never going to risk 1% per day. I was always risking 5-10%, but when I started to figure out less is more, it really made more sense. Okay, so some of you guys might be in a stage of finding a mentor. You're gonna always have to look up to someone. I found a mentor too. I was just saying, Steve Morrow. Also, the father of psychology, Mark Douglas. He's everyone's mentor in trading. That's Uncle Mark for everybody. Make sure you listen to him speak. He's the godfather of psychology in trading. If you're struggling with psychology, listen to Mark Douglas. He should be your psychological mentor in trading. I can 100% attest to that. Okay, if you're having difficulties with psychology, listen to Mark Douglas. Okay, and then in 2009, during a trading seminar, Brian connected with an experienced trader named Sarah. Okay, all of these names are just made up names. Okay, so Brian experienced with Sarah, who became his mentor. Sarah emphasized discipline, patience, and the importance of sticking to a detailed trading plan. So, how many of you guys have listened to Sarah, where she is emphasizing discipline? Do you guys right now have discipline in your trading? Be honest with yourself. Be honest with yourself. How many of you guys are disciplined traders right now? If you're not a disciplined trader, you got to get to this stage eventually. I don't know how long it's going to take you. It might take you 3 months, 6 months, 1 year, or 5 years. But you need to learn discipline in the markets. Like today, how some of you guys avoided trading FOMC, that shows discipline. You know how hard it is for traders to understand to walk away from FOMC? Because they see it like slot machines. They see it like if you hit the sell button today, you made a lot of money. But if you didn't, you lost a lot of money. So to me, that's gambling. There's really no structure in today's market. It was just Powell opened his mouth and the market reacted. There was nothing that could have kind of anticipated that. To me, it looks like it's like a lucky trade, you know? And I don't want to gamble on that. I don't feel comfortable trading that. I feel comfortable trading structure in the market where I can kind of predict things with high probabilities. Today was just a free-for-all. As soon as he opened his mouth, boom, markets dropped and wouldn't recover. So if you get caught thinking that the market, oh, I got to buy the bottom, I got to keep buying the dips, you're buying a falling knife that could continue just dropping and dropping and dropping. And you saw today how that played out. And if you kept buying the dips, you constantly kept going back into drawdown. And patience. Okay, so Sarah emphasizes discipline, patience, and the importance of sticking to a detailed trading plan. So every single day I stick to a trading plan. I have a routine every single day I do. I like to think I am a patient trader and I'm a disciplined trader. So some of you guys are in the stage of learning this. Hopefully you guys can get there. And then consistency and strategy. So Brian developed a well-defined trading strategy focusing on technical analysis and chart patterns. So technicals and chart patterns are not everything in trading. You're going to have to learn some sort of fundamentals, macroeconomics of the markets. You're going to have to learn how to master psychology and risk management. So there's multiple variables in trading, and it's not just if you're a good technical trader, that's it. You're going to be successful in trading. There's so much more that has to be learned. That's why you got to constantly keep learning. So this is where Brian began to journal his trades, meticulously documenting what worked and didn't work. So this, again, look at what year Brian started journaling. In his, what phase is this? The turning point in years 6 to 10. Okay, this is when Brian finally pulled out a journal. Okay, after 6 years, 6+ years, 6 to 10 years, he finally started to journal. Okay, some of you guys are still not have pulled out your journal yet. Okay, so I think it's time now. Everybody pulls out a journal. Okay, and if you guys have already pulled out your journal, I think it's time to spend more time with this journal. Okay, and learn. Please, guys, learn. Like listen to Brian's story over here, and then you're gonna have the comeback. Okay, even sports teams have a comeback. I've been waiting 20 years for Dallas Cowboys to have a comeback. I've been waiting 20 years for Montreal Canadiens to have a comeback. I've been waiting 20 years for the Toronto Blue Jays to have a comeback. I've been waiting 20 years for the Chicago Bulls to have a comeback. I'm waiting for these teams patiently to come back, and they're not coming back. I think these sports teams are not looking at their journal or what their plan was, what worked 20 years ago. It's not working right now. So you look at the comeback. Look at the financial comebacks in the markets. So remember, let's go back to the markets. Remember 2007, 2009, the downturn in the markets. The markets had a comeback. by 2012, following Sarah's guidance and learning from his mistakes, Brian regained his confidence. So it's all about regaining your confidence. I'm picking on Paul in YouTube, but maybe Paul now has regained a little bit of confidence now, recovering the setback and coming back a little bit above break even. So confidence is increasing. With more and more experience you have in the markets, you're going to gain, you're going to build your confidence. So that's why for me, psychologically, my first trade of the day is always a small trade, because if I lose that trade, it doesn't really take a hit on my confidence. If I do good on that first trade of the day, then it kind of boosts my confidence to take the next trade, and kind of dictates the pace of how that day is going to end up. So your first trade, it's kind of like when you go up to bat in baseball. It's your first hit. You hit a single, you hit a double, you get on base. It kind of dictates the pace of you're getting confident to continue to go. If your first at bat is a strikeout, that you're kind of sets the tone for the rest of the game. You're going to be probably, when you go up second time at bat, you're going to be scared to take a swing. You're going to be a little bit reluctant to swing the bat. So trading is the same way. You can use sports analogies and put them together with trading. It's the same thing. So Brian regained his confidence. This is the comeback. When now you regain your confidence and you're like, okay, now I get this. Now I know. I learned from all of my past mistakes. I got a plan now. I'm respecting risk management. I'm disciplined. I got everything. I've learned more and more about the financial markets. Now I'm confident to come back in and trade these things how I should have been trading years ago. So he had more consistent wins than losses. That's all. That's what trading is. You just want to have. I know traders that are 60% traders. 60% of their trades are profitable. Like 6 out of 10 trades are profitable, and they're growing their accounts because they're doing it with proper risk management. You don't need to be a 90, 95, 100% trader. You're not going to make 100% trading every single time. Maybe there is someone in the group, but I don't think that that's going to be everybody. So, you don't need to be a perfect trader in order to be consistent in the markets. You have to have a consistent risk management plan. So with regaining his confidence, learning a lot, the comeback, he had more consistent wins and losses, continuously learning from your losses. Although still cautious, he felt energized by his newfound understanding of market trends and price action. Okay. Now the growth phase. Okay. So some of you guys, again, the growth phase, traditionally I put these in 5-year increments, is your year 11 to 15. Some of you guys have not even been in the markets for 11 to 15 years, okay? Some of you guys have. But this is your growth phase. And again, I've just put these in 5-year increments. Some of you guys might go through these phases. Again, I like, maybe this is your 3rd year, for example. Maybe you went through the beginning years in 1 year, maybe the next stage another year. So this could be your 3rd year, and now you're on your growth phase. So everybody's different, okay? So remember, just these numbers over here, these years, I kind of just clumped them together in 5-year increments. But it does take someone maybe 15 years to get to the growth phase. But this is when now you understand everything about the financial markets, and now you're expanding your knowledge and you're growing. So what is this phase? And we're using Brian again. So as Brian matured as a trader, okay, so at some point, that's exactly my words today that I said in the Discord. Be mature today. If I'll go back to the Discord after and I'll show you exactly what I wrote. But be mature with your trading. You're going into FOMC. Stop gambling and trade like a mature trader. Some of you guys have not learned maturity in trading yet. It takes years and years to learn maturity in trading. So as Brian matured as a trader, he realized the importance of diversification. So this is part of the growth phase. Now he started to diversify his profits that have been growing over time. Now he's getting his money to make more money, or getting his profits to work for him to continue to make passive income. So Brian ventured into trading options and ETFs. So some of you guys have heard of what are ETFs, a lot electronic trading funds. Some of you guys are now going to learn a little bit about options. We got this new program coming out in the new year. I'm excited to teach all about trading equities, like how I'm buying. Right now I'm not trading MicroStrategy with options. Right now I'm buying straight shares of MicroStrategy. I can do options trading with it if I choose to. I can also have covered call options and earn passive income. I can trade ETFs if I like, all of these things, but we're going to provide the education and show you guys what you can do when you get to this phase, the growth phase of trading. And I know all of you guys are going to get to this phase at one time or another. Some of you guys in a year, some of you guys 5 years, some of you guys might take 10 to 15 years, but eventually I hope that everybody will get to the growth phase and really see what you can do with the financial markets. Once you start to learn how to trade options and ETFs and what these things are and what they're comprised of and how you can leave your money in here and it will passively grow over time, can really change the game for all of you guys. Okay, so it did change the game for Brian over here. He broadened his trading portfolio, not just trading NASDAQ or just trading gold or just trading oil or just trading GBP USD or currency. Broadened it by trading options, equities, ETFs. We can add crypto in here, a lot of things. Okay, so he learned advanced strategies. Some of you guys now have an understanding of the basic strategies of trading, and maybe now you're going to advance into advanced strategies. So what I mean by advanced strategies, there's what I just mentioned, a covered call option. Some of you guys understand what a covered call option is. Some of you guys don't know what a covered call option is. Very briefly, it's an advanced strategy utilizing options and equities. So for example, if I own 100, you have to own 100 shares of a security that offers options. So MicroStrategy, I'm using this as an example. You can buy equity and it also has options trading. So if you have to own 100 shares of the company. So you got to have a little bit of capital in order to do this advanced style of trading. But this is when you've put in maybe 10, 15 years into the markets and you've gained knowledge and you gained capital, and now you can start to utilize these strategies. I don't want to make it look like no one's going to get to these strategies, because I know everyone will get to these strategies. And I know some of you guys are there right now and doing these strategies in your trading. So what it basically is, in a nutshell, is if you own 100 shares or more, you can have a covered call option, and you can start to write options and earn premium. So if you own 100 shares of MicroStrategy, you bought it, let's say for example, I'm just using generic numbers, you bought a MicroStrategy at $100, 100 shares, okay, you bought it and you put in capital wise $10,000, and you can have a covered call option sitting at $110. So if MicroStrategy goes up to $110, you're forced to sell your 100 shares, but you gain the premium. And the premium could be $10 per share, and then you increase another $1,000. But if it doesn't get up to 110, you keep the premium. Okay, so that's the beauty of covered calls. If it doesn't reach $110, let's say it just consolidates at 100, or even if it goes down, if it goes down to 95, you still make the premium. So it's kind of like insurance. So when you're in drawdown, you're still making some money. So these are the type of advanced strategies and hedging techniques to manage risk better. So there is ways how you can protect your capital, protect your profits, and manage your risk. Okay, so this is more advanced style of trading. And then the highs and lows. Okay, so in 2014, Brian experienced a series of profitable trades that boosted his capital significantly. Riding high on success, he felt invincible. How many of you guys have gone through this where you're riding the highs and you feel invincible in these markets and you can literally trade anything and it will go your way? However, complacency set in, leading him to overextend his positions on a few trades. I'm putting my hand up, guys. I can tell you guys 100% this was me, where I got very complacent with my trading. Back in the day, I made some profit, you know, and I was riding high on my success. I thought I was invincible. I thought nothing could stop me in these markets. I got very complacent, and it leaded me to over leverage. It leaded me to trade with Lambo sizing, and I screwed up on a couple trades, and then went back to revenge trading to try and get back, and basically lost a shit ton of money in a matter of minutes. Okay, so you know, I've been there. I know some of you guys are there, and if you haven't done this, congratulations. Don't be a victim of this. Okay, if you're riding and you're growing your account and you're successful, just stay professional. Treat it like a business. Continue, you know, don't get complacent. Okay, one thing I've learned over time is don't get complacent. You know, stay hungry in the markets, stay active in the markets, but stay humble too. Appreciate your profits, because you don't, all that hard work, years and years and years of blood, sweat, and tears that goes into trading, you don't want to just give it back, because it's demoralizing, especially after years and years of doing this. Some traders don't ever recover. I'll tell you guys the honest, true facts. A lot of traders, a lot of my friends that got to this stage, they never recovered, and they've never traded since that day. You know, there's a couple snipers in our group who got to this stage, and I've never heard from them ever again. You know, I messaged them and they're not returning my message, so I pretty much assume that they got too complacent and they gave everything back, and then they put years in and will never recover. You know, it happens, guys. There's the good sides of trading, and then there's the ugly sides of trading. So trading has the good, the bad, and the ugly. Unfortunately, this is the ugly side. So you can see you're going to have highs and you're going to have lows. Okay, but you can literally learn from your lows as much as you can in your beginning years, so you don't go through this cycle 10 years later, 15 years later, because it could be demoralizing. Okay, and then you're all going to have a reality check. Every trader has a reality check. Whether you like it or not, you're going to have a reality check. Maybe today was a reality check for some of you guys. Okay, and I'm not saying that to be rude, but today was basically a reality check for you, for everyone. You know, FOMC was a killer today for all securities. Doesn't matter what security you're trading. There was that volatility today, and it might be a reality check. So there was a reality check back in 2015. Some of you guys were trading at this time. Some of you guys weren't. Some of you guys maybe remember this. I don't know. I remember this vividly. This was a reality check. The market crashed in 2015 due to global economic instability. Okay, I don't know everyone's age here, but 2015, you should remember what happened, global economic instability around here, what was going on around the world. If you don't know, go back and look at history and see how the markets were trading at this time. Brian saw many of his trades turn sour overnight, just like that, you know. They can announce war overnight, over a weekend, some type of crisis, and the markets, pre-market trading, while you're sleeping, you wake up and holy shit, you're like, what the hell just happened? Okay, so if you're doing overnight extended plays, if you're swing trading, if you're a weekend holder, you can experience everything, especially right now in the turbulent times we're living in now. Anything can happen overnight. Anything. So you have to understand, if you're taking swing trades and you're holding overnight, how much are you exposing? How much of your capital are you exposing? How much of your trading account are you leveraged? All of these things you got to factor in, because when you wake up in the morning, you might be awaking to a reality check. So you might wake up overnight and you're resulting losses that you hadn't anticipated. The emotional toll was heavy for Brian as he struggled to grapple with the reality of his mistakes yet again. So you can see Brian constantly is going through reality checks and making crucial and critical mistakes and trying to recover. So this is the highs and lows of trading. This doesn't matter how many years you have in this game, whether you got 1 year, 5 years, 10 years, 20 years, 30 years, 50 years. It doesn't matter. If you don't respect the markets and you don't respect your risk management and you don't respect your trading plan, you will be a victim to a reality check at one point or another. you know? So for some of you guys have gone through this, you guys have survived this, you guys have learned from this, and you guys are confident that you can handle this again in the future. Some of you guys have not experienced this yet, but when you do, you will remember this conversation that you had here today. So please, guys, trade according to a plan, trade according to a specific risk management plan. If you're intraday trading, if you're scalping the markets, if you're swing trading, if you're holding over a weekend, what security are you holding over a weekend? Is it a volatile security that things can happen over the weekend and that thing can open up on Monday morning and it's completely different volatility? Okay, so just be careful with these things. And then the final stage is the resilience phase or stage. So this is kind of your later years in trading. I have over here like year 16 to 20. So you can see that after you've gone through all of these phases, you've gone through all of these stages, now you are attested, you're at the resilient phase. This is where you got thick skin, you've seen it all, everything, you've gone through it all. There's nothing that could stop you. Like right now, I can officially say this. I pretty much, in my years of trading, I've seen everything. I've witnessed everything. I've been through it, the highs and lows. I think I've developed a little bit of resilience in the markets that I'm not saying that I'm invincible, or but this is, where you got to be complacent, because anything can happen. I don't know what the future will hold in the markets, but I'm ready for whatever it's gonna be. I'm ready for it. If like markets today, I just did some quick scalps early in the morning on MicroStrategy. I made my percent and I got out. Tomorrow, I see the securities that I can go shopping tomorrow. Look at all the discount buys there is. There was some major big players that dropped 3 to 10% today. Tesla took a big hit. Maybe it's going to continue to drop. Tesla is a good security I had my eyes on, but I didn't want to buy the absolute highs. I didn't want to buy into all that. Now I can look at Tesla, maybe start a small feeler position. Maybe this week, next week, I'll start a position on Tesla. Maybe start a position on Nvidia. Maybe start another position on MicroStrategy. On anything in the markets. There's good buys now. This is when you can be a disciplined trader and go shopping. Just like you're going to go shopping at the mall and buy your family and friends some Christmas gifts. This is the time where we need to be shopping in the markets. On days like this, when you're not in, you should be now putting some securities on your watch list. Now, where you were looking to buy Tesla, now you might be able to buy Tesla 10-15% cheaper than what it was. So you're getting a discount. You're getting in at a good price. You don't need, that doesn't mean you go all in, because it might drop further. So this is where you got to use a little bit of a scale-in approach, position sizing, all of these things. So I look at the positive things that come out of a market. Even today there was a big sell-off, but I look at it as opportunity to look for positions and to make some profit in the markets, whether I'm scalping, swing trading, investing, position trading, all of those things. This is what you need to learn over time to expand your knowledge of the markets. So this is where, the resilience phase, again, refocusing and learning. So you're determined not to repeat past mistakes. Okay, so how many times do we talk about this on a daily basis? Do not repeat your past mistakes, and please learn from them and move on. If you are constantly doing the same mistakes over and over and over, you're constantly losing over and over and over. How long is it going to take you to overcome this? You need to learn from past mistakes. Can we all agree that we're all going to make mistakes in the markets? Here, yes, we all will. I will, you will, we all will. But some of us might learn faster than others on our past mistakes and not do them again. So Brian redoubled his efforts to learn and grow. This is where he didn't give up. He redoubled. He doubled down on his efforts to learn. He didn't double down on his capital size. He didn't double down on his accounts. He doubled down on efforts to learn. So when you double down on efforts to learn and take trading serious, maybe some of you guys don't need to be in 16 to 20 years phase like Brian. Maybe you guys are ready to double down and take your trading and your learning to the next stage, maybe in the first 3 years, maybe 5 years. who knows? Maybe some of you guys under a year can learn this really fast with today's technology and how you can learn things on YouTube and everything that's out there, audiobooks and webinars and tutorials and free knowledge out there. Maybe some of you guys can learn this a lot faster than Brian took 20 years to learn this. He joined online trading communities. SST, you guys are here with us. This is an online trading community on YouTube, in Zoom, everything, guys. So we're here with you guys. You guys we're sharing our journey with you guys. I'm sharing this streaming journey where I have no idea how YouTube works. Sometimes I say some silly things on YouTube and we get censored and we get shut off and this and that and we get strikes. But I don't really care. I want to be real with you guys. I want to be myself with you guys. So you guys are seeing the journey of like myself and Dave in the last 5 years, not only our trading, but also how we mentor, how we help each other, how we're a great community. We have amazing members here in our Discord on Zoom who are constantly helping each other out. I know everybody's journey here on Zoom. I follow your highs and lows, everyone. I know how you guys are all trading in here, guys. Everything, I always watch you guys. I know how you guys are doing. I know when you guys are battling adversity. I know when you guys are at your highs and lows and everything. But I got so much respect for you guys that are still learning, constantly learning, fixing up your mistakes, striving to be the best trader you can be. It takes resilience, and that's what you guys got. So continue at it, guys, and eventually you guys will understand how this game operates. And Brian also actively sought feedback from other traders. So that's why I said, guys, get engaged on these calls, in Zoom, talk amongst yourselves. On YouTube, talk amongst yourselves. I love how Hearst Horns is talking. Everybody's talking in here. It's good, guys. It's good feedback. Keep it constructive, keep it positive. Try to keep your comments to yourself if they're negative comments, but keep everything positive, okay? So eventually, hopefully, maybe some of you guys will get to this stage where you guys can help mentor others. So Brian became a mentor. So as his skills improved, Brian began mentoring new traders, sharing his experiences and the lessons Brian had learned from both successes and failures. Teaching others solidified his knowledge and reinforced his commitment to disciplined trading. So Brian, after all these years, after going through everything and learning, he became a mentor and started to help other traders. So maybe, hopefully, one day you guys will help mentor others, or maybe in your family you're going to start this over the holidays. Maybe you're going to start talking to your family about the markets, start a new conversation, talking about the stock markets, talking about crypto, talking about this, talking about what Powell said, talking about interest rates. Everybody is interested. Everyone, even if someone is not in the trading markets, interest rates, trade, all of this will affect them at home. Everything will be affected by the markets, whether you trade or not. It's good to have a conversation and talk amongst people. I love having a coffee. If any of you guys were here, I would love to go out with you, have a coffee, have a smoke, just talk about the financial markets. I find it fascinating, and I continue to learn. Some people can't stand when they're around me because all I talk about is the markets, and some people are like, Ron, you got to stop talking about the markets. Enough. Talk about something else. Okay, let's talk about sports. Ron, you talk too much about sports. Let's talk about something else. Okay, UFC, oh, Ron, too much of that. Talk about something else. Okay, the weather. Who cares about the weather? Talk about something else. What else you guys want to talk about? Find something you're passionate about and give back. So by 2020, Brian had developed a more balanced approach to trading. He recognized the importance of not only trading, but also investing in other areas of life, including his health and relationships. So remember, guys, there's more to just trading than just trading candlesticks. Take care of your health. I got to speak specifically for myself. Sleep is very important. Lack of sleep will cause lack of judgment in the markets. You'll make mental mistakes. How many of you guys have been tired in the markets? You made mental mistakes. You're like, holy shit, how did I hit the buy button where I was supposed to be selling? I've done that millions of times when I'm tired. Or you're trading, you were supposed to put in a zero point 0.1 lot size and you accidentally put 1.0, and now you're in the trade in a standard lot size and you're shitting your pants because now you're in drawdown where you were, but those are mental mistakes. Lack of clarity, lack of sleep. So trading, make sure, guys, you stay healthy, eat good food, work out as much as you can, stay active, will keep your brain active in the markets, and have healthy relationships. If you don't jeopardize family time, with your kids or your spouse for the markets. Okay, remember, family comes first, health comes second, and then markets come third. In my opinion, that's the order. Okay, family always, your health, and then the markets. Don't put the markets in front of your health and your family. That's not the right way to do it, guys. And then if you got healthy family life, you feel healthy, believe me, your trading will be very healthy. You will understand how to do this properly. Okay, guys? So take care of your health. Sleep as much as you can. Get a good night's sleep before getting into these markets. Try not to be on the charts 24 hours a day. Believe me, it doesn't work. I used to do that back in the day, watching 1-minute candles. I learned a lot, but trading would really affect my trading. Yeah, I can watch candles and not trade for hours and hours, and yeah, that I can say helps. But trading while you're tired, not the best, okay? Because you might make some mental mistakes. Okay, so let me just give you final lessons, guys. Don't leave me yet. We still have a little bit of slides to go through, and to me, these are the most important slides right now, okay? So now have you guys thought a little bit about your trading, your stage, your journey, where you guys are at, what you need to do going forward? The reason why I chose this to do at the end of the year is to give you guys, maybe get you guys excited for 2025, to see how you can change your trading going into the new year. Maybe give yourself some trading resolutions. We always give ourselves New Year's resolutions. Oh, I want to lose 10 pounds. Oh, I want to do this, or I want to do that. But maybe have some trading resolutions. What can you do in the new year to continue to make yourself the best trader? So through Brian's 20-year journey, there was crucial lessons that Brian learned. Let's talk about these. So number one, discipline is key. Sticking to a well thought out trading plan is vital for long-term success. Good night, Rob. Thank you for joining. Have a good night. Sergio, you got one rolled up, my man. I'll have one very, very soon. Hopefully one day we can have one together, man. Okay, so discipline is key, guys. Sticking to a well thought out trading plan is vital for long-term success. So number one, if you want to write these down, if you want to take a screenshot, if you can memorize these, please do. Discipline. Okay, you're not going to get anywhere in trading without discipline. You're not going to get anywhere in life without discipline. Make sure at some point you understand the importance of discipline with whatever you do, and you learn it, and why disciplined approach beats any strategy or any approach. Okay, and figure out what is your discipline. Okay, my discipline might be completely different than yours, but eventually you will figure out what your discipline is. But you need to figure it out. Continuous education. Hopefully you guys are here to continue to learn about the financial markets, be a student to the game forever, as long as you are in the markets. Why? Because the markets are always changing. So you never stop learning. Like, the markets are very active on a daily basis. Right now, it's the Asian market, it's the futures market right now. The markets are moving. They're probably volatile right now. Liquidity is moving right now as I'm speaking. Okay, so the markets are always changing. We don't know how they're going to be 5 years, 10 years, 20 years down the road. They're always changing. So we have to continuously adapting and educating ourselves. Emotional control. Okay, emotions play a big result in our profit and losses. So keeping emotions at bay during trading decisions can prevent major financial mistakes. So make sure you learn how to master fear and greed in the markets. Okay, when you're up money, don't get too greedy. Like, learn, have a trading discipline or a plan. When you are in profit, what you're doing, what is your plan? Also, don't be scared too in the markets. Okay, don't be fearful to take trades. You have to overcome fear and greed at some point. In order to do this confidently, like, you shouldn't be scared. There's other things to be scared of in the world than the financial markets. Okay, risk management. Hopefully, some of you guys are going to learn risk management at some point and understand why we talk about this for so many years. Always diversify your portfolio and never invest more than you can afford to lose. That's very important, guys. Do not deposit your rent money. Don't deposit your grocery money. Don't go borrow a loan or a credit card and put that into the money, because if you are not winning, you're going to add more financial burden and stress on you that you shouldn't be handling, and you're going to be paying interest on that as well. When you like, it's just a recipe for disaster. If you can learn how to diversify your portfolio, that would be fantastic. If you're making profitable trades, learn how to move profitable capital into other securities, maybe more passive securities that yield long-term gains without the volatility, and you can sleep good at night. For me, for example, Apple is one of my long-term securities. I can continuously add to that position on dips, and I've been holding since 2008. I can sleep pretty good holding Apple. I don't think Apple is going to crash overnight unless something dramatic happens in technology, but Apple is a pretty good long security, continuously diversify. MicroStrategy is a very, very volatile security right now because Michael Saylor makes money on selling volatility. That's one of his revenue streams. Also, it's traded with like Bitcoin. He buys, so Bitcoin is a very, very volatile security right now. So I like to personally day trade MicroStrategy. I love the swings. It's perfect for a scalper. And what I do is, with the profits that I make from that, I go park that profit into a long-term security like Apple that will constantly give me a good yield years to come without that volatility. Okay, so you see how like my trading plan works. I utilize MicroStrategy for its volatility. I get in and out, hopefully hit my daily goal, and I move that profit into a long-term security that can yield passive income. Okay, community is strength. Engage with other traders to share experiences and insights. It doesn't always have to be with SST. Maybe you guys are part of a different community. It's all good. As long as it's positive, as long as it's engaging, and as long as you're learning, continuously learn from anybody that you can. Okay. And then finally, some recommendations for aspiring traders like yourselves. Inspired by Brian's extensive journey, Brian decided to compile a guide of recommendations for anyone starting their trading journey. So if you're early in your phase, this might hit home with you. If you're struggling, maybe this is where you got to go back to. Okay, so these are just some recommendations. Number one, start small. Always start small. Begin with a small amount of money and a demo account to practice without risk. Okay, so just always start small or a demo. Okay, if you come into the markets with a lot of capital and you have no experience, you guys know what's going to happen. You're probably going to lose all that. So always start small. If you're learning a new strategy and you've never traded that security before, start small. Okay, if I'm talking about MicroStrategy, if you guys have never traded that security, I just told you it's very volatile. Is that something that a new trader should go trade right now with a lot of capital? Probably not. Okay, you got to start small. Learn how it moves. It moves like some security you've never seen before. Like, the thing is very, very fast. It makes gains and it gives them back within minutes. Like going into where they got inducted into the NASDAQ, it was trading at $390, and then they went up to $436. That's where I sold into, and I closed the position. Had I not, that thing came tumbling right back down to where I entered at 396, and today, as I'm speaking, is sitting at 350. So do you guys understand what I mean? The highs and lows of that security. It's very, very fast. It's furious. So if you're learning to trade that, start off with a demo or start small. Educate yourself. Read books, take courses, and learn from reputable sources. Have a trading plan. Develop a detailed plan with clear goals, strategies, and risk management rules. Write it down if you have to. Write it down and post it where on your monitor, put it on your forehead. I don't care where you put it, but make sure you have it. I'll put it on my forehead. I'll write it on my forehead on every time we do these calls. Risk management, trading plan. Make sure you adhere to this and you respect this, okay? Keep a trading journal. My head is going to blow up right now from how many times I'm mentioning this. Document your trades, thoughts, and outcomes to learn from them. If you fail to do this, then you're preparing yourself to fail in the financial markets. I'm sorry to be negative, but I'm just trying to talk the truth here. So be patient, okay? Success won't come overnight. I can attest to that. Dedicate time and effort to grow your skills. This might take you, you've seen the different phases, might take you up to 20 years, might take some of you guys 15, 10, 5 years. It's not an overnight process. Success is not going to happen overnight. You're not going to go to sleep tonight and wake up tomorrow and you're going to be a millionaire. No, it takes, you see what it takes. It takes a lot of resilience. It takes a lot of going through the highs and lows, a lot to learn from your mistakes. Network, guys. Join trading groups or forums to connect with others and gain new perspectives. Reflect and adapt. Part of trading is adapting to these fast financial markets. Regularly reviewing your performance and be willing to adapt your strategies is needed. So your strategy that worked last week might not be working next week. So how do you adapt? What do you do? You know, like your style of trading might not work. It maybe work this year, it might not work next year. Maybe the markets are constantly trading differently. So you got to be able to adapt. Don't get stubborn on one strategy and that's it. You got to learn how to have pivot. You know, you got to learn how to make different moves in the markets. You got to move with the market. Markets are very fluid. They're constantly moving. You got to move with the markets too. So Brian's story reflects the real journey of a trader. Okay, I just kind of use the name Brian generic, but this was a true story of a trader. I'm not going to say his name, but it's Brian over here. So full of highs and lows, challenges and accomplishments, it emphasizes that trading is not merely about making money. Hopefully you guys understand that trading is not just about making money. It's about continual learning. Okay, you're constantly learning, gaining knowledge. It's constantly learning about growth amongst yourself, growing as a person, growing as a trader, and obviously growing your financial account. It's learning that it's about learning to be resilient in these markets and building a community together with like-minded traders. So with that being said, guys, enjoy your trading journey. Good luck to all of you guys. I sincerely say that from the bottom of my heart. I want to see you guys be successful. I want to see you guys be financially free at some point in time. I want you guys to see the fruit of your hard labor that you guys are putting into these markets. You know, I honestly believe that everybody on this call will get there at some point. It just might take some of you guys longer than others. It's normal. Okay, don't feel bad if you see your friend is learning the markets in 3 years and you're still at your 13th year and you're still struggling. It takes time, guys. You know, everybody learns different. Go back to when you were in school. School is a good test to your learning. Maybe you see that, like I saw that too. When I was in university, I had to study for 2 weeks for one exam. And my friends were out partying every single night. They didn't even open the book and came the day of the exam and got a better mark than me. And I could not believe it. Do you know how pissed off I was? These guys were partying every single night, didn't even open the book, come to the exam, and they get 85%. I'm studying, sleeping at the library for 2 weeks, and I get 80%. How do you think that made me feel? You know, so, but I didn't, I understood at a younger age, everyone learns different. Everyone retains information. Some people are just geniuses like those guys. I would have loved to just party and go get 85%, but I wasn't that fortunate. So you got to understand, trading is different for everybody, okay? So when do we live trade again? Just check out our weekly trading schedule. I'm gonna it's a toss up for London tonight. I'll message you guys later on about London. I'm 50-50 with London. It's been tough volume as of late, and I'm not feeling really well. I got a really bad migraine headache. So 50-50 on London, but 100% Monday morning. It might be our last trading session for the year. Monday morning we'll maybe do a 6 to 10 session or 7 to 10, but 100% Monday morning with all of you guys. Just if you're going to continue to trade tomorrow and Friday, just be careful, guys. We don't know how the markets are going to react now to post FOMC. Yeah, there might be some possible bounces but let's see now. Is it going to be a dead cat bounce, or is it going to be actual verified support area? Are we going to find a verified bottom? Do your top-down analysis. Look now where the drop is. Are we coming into a demand zone on a monthly, on a weekly? Like, are we coming into where we can see back in the day there was a red box, now it's turned into a green box? Are we falling into that green box, or are we going to continue dropping, with just small counter trade buys? And then we're trading into supply now, so that supply might absorb those buyers and continue to push it down. So be smart tomorrow. Okay, don't get sucked in any traps. It's easy to say, oh, the market dropped 10% today, it's going to bounce back. No, it doesn't have to. It could just, that narrative where it counter trades and then continues to drop. So just be prepared mentally. Just have that at the back of your mind. If that's what's happening, then you know how to trade it tomorrow. Just understand. But if it's bottoming out, it's making 2 bottoms, 3 bottoms, it's breaking the resistance, then that resistance is turning to higher low support holding. Yeah, then we might get a reversal. But it will start, guys. There's going to be now volume trading right now in the Tokyo futures session. That volume will move into London. Hopefully, if you guys are trading London, whether it's with me or you guys are trading it, let's see if London has good volume, and let's see how that moves into New York tomorrow. Okay, guys. So I hope sincerely, from the bottom of my heart, you guys enjoyed tonight's webinar. I hope it hit home with some of you guys. I hope you guys learned something. This is what is a stock market. This might be a preview of our next upcoming webinar. Not sure why it's on the last page here. This was Ron. Lack of sleep putting this together, but maybe it's something foreshadowing what's to come at SST. We might be learning about the stock market in the near future. But guys, hopefully now you can reflect on where you are as a trader and necessary adjustments you need to make in order to get to the next phase or stage. Do you guys mind if you guys share, like, really quickly in the chat where you guys are at in your trading journey, just so I know? If you don't feel comfortable, it's okay. Remember what our phases were. So really quickly over here. Phase 1 was your beginning years, okay? Your second phase was the turning point, and then phase 3 was the growth phase, and then the final phase is the resilience phase. So hopefully some of you guys are progressing in your phases, and I can attest that all of you guys are going to have to go through one of those phases at one point, and some of you guys will overcome it. Perfect. Some of you guys will struggle in one of those phases for multiple years, but you got to go back and consistently learn. Okay, guys? So it's almost 9 p.m. We had fun, almost a 2-hour webinar, guys. So that's it for me. Thanks everyone on Zoom. I do appreciate all of you guys joining. We recorded this. We will upload this. Everyone on YouTube, I appreciate all of you guys as well. If you guys can hit the like, subscribe, hit the notifications, it helps SST's community grow on YouTube. And I really do appreciate it, guys, because everything we do on YouTube is for you guys. So we want to constantly help new traders be successful. So the larger our community grows, it's fantastic, guys. So thank you, and just be positive, guys. We got a new year coming. oh man, it's going to be full of highs. Like so much happening now in the markets. Look at crypto right now. Everything. It's going to be exciting times, guys. I want you guys to be excited about getting ready to trade the new year. So that's why hopefully you guys learned from this webinar to set up a plan, get ready for the new year, figure out what phase you're at and the necessary work that you need to do to get to the next stage. And guys, just please stop gambling in these markets. I can't stress to you guys how important this is. You're not going to get anywhere by doubling down and gambling in these markets. Please take your trading serious. The more you learn this, the quicker, the better you will be. Okay, so awesome, guys. Thank you guys for sharing management. Thank you for sharing, guys, where you guys are in trading. I really do appreciate it. Vic, don't do London. Load management is the thing. Yeah, I understand. I'm burnt out. I need to sleep. It's been like 2 days I haven't slept. The London session right now, it's kind of breaking my sleeping patterns, and it's not easy. Once I get in the routine of getting back into it slowly, then I can do it no problems. But it's hard to break this routine, but I'll get into it, guys. Awesome, guys. Thank you. And Benyam, I appreciate you too, sir. Thank you. Luke, you're at the resilience phase. My man, you're there. Keep it up, Luke. Luke, I remember from day one when you joined SST. Man, so yes, I've been following your journey, and you're at the resilience phase. Continue with that phase and enjoy it. Enjoy the ride. Okay, guys, have a good night, everyone. Thank you guys for joining. I appreciate everyone. Armand, Siobhan, Howard, Negraj, Noor, Sally, Vic, Wayne, Barney. Thank you guys for joining. Samuel. Appreciate all of you guys. Have a good night, everyone. Thank you. God bless. Thanks, guys.
Recording stopped.
Hey guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.